While the Fed has moved aggressively, they still have more work to do. We believe that the Fed will have to create economic pain in order to achieve their objective to getting inflation back down to target. And a recession is becoming much more likely. As such, we're advocating for a higher quality approach to fixed income. It does help that after a very rough start to the year, that much lower bond prices have brought higher yields. In late September, the yield on the Bloomberg U.S. Aggregate Index reached almost 5%, the highest yield seen since 2008. We do see these yields as attractive. Admittedly, this much higher yield still doesn't cover inflation, but over the coming years, we believe that inflation comes down and it will look attractive in retrospect. We have increased our duration positioning to a moderate overweight after the yield on 10-year treasuries moved up. In late September, the 10-year treasury yield got as high as 4%. This yield level is consistent with our treasury yield model. But when we plug in our year-end expectations for federal funds rate and inflation, our model is indicating a lower yield. We have been increasing our duration over the course of the year. Have we reached the peak? Not necessarily. Markets can certainly extend beyond fundamentals and liquidity conditions are tight, but we believe that mounting evidence of slowing economic growth will help create a ceiling for longer-term yields. Moving to non-investment grade bonds and credit risk, we don't think credit spreads have gotten wide enough, and we are waiting for a better entry point. Non-investment grade credit spreads do not currently reflect the default risks presented by expected recessionary conditions. Ultimately, we do want to shift back to lower quality exposure before the Fed starts easing again. High yield tends to do very well in the rebound, but we think we have time. For more of our thoughts on fixed income, please visit our website at touchstonefunds.com.
This commentary is for informational purposes only and should not be used or construed as an offer to sell, a solicitation of an offer to buy, or recommendation to buy, sell, or hold any security. Investing in an index is not possible. Investing involves risk, including the possible loss of principal and fluctuation of value. Past performance is no guarantee of future results. Please consider the investment objectives, risks, charges, and expenses of a fund carefully before investing. The prospectus and the summary prospectus contain this and other information about the funds. To obtain a prospectus or a summary prospectus, contact your financial professional or download and/or request one at touchstoneinvestments.com/literature-center or call Touchstone at 800-638-8194. Please read the prospectus and/or summary prospectus carefully before investing. Touchstone funds are distributed by Touchstone Securities, Inc., a registered broker-dealer and member, FINRA SIPC. Touchstone is a member of Western Southern Financial Group. Copyright 2022, Touchstone Securities, Inc.